Hey everybody, good afternoon and welcome to the Supply Chain Solutions Weekly Ship Show. Today is February 10th, 2022, and this is episode number 6 in our weekly educational series that keeps you informed of the changing market conditions as we work to simplify supply chain complexity in a time of disruption and uncertainty. As always, it is my pleasure to welcome my Ship Show co-host, Jason Brand, our Director of Business Development, who joins me each week on our broadcast. And finally, my name is Anthony D'Ambrosio. I'm the Vice President of Business Development at Supply Chain Solutions, the company that always delivers value quickly, affordably, and flawlessly. And as usual, we want to thank our amazing Director of Marketing, Vanessa Fry, for producing today's show. So folks, this week I'm flying solo as Jason is traveling, but we do have a very interesting topic today that I'd like to discuss with everyone. So the topic is, will there be a market correction in the container freight market in 2022? I thought this would be very interesting because we're seeing a lot of emerging trends right now, what we think and where we think the market is going to go. So I think it's important for everybody to understand that in 2020 and 2021, we faced many difficulties in logistics like limited storage space, out of control freight rates, port congestion and bottlenecks, as well as truck and driver shortages. And one of the biggest misfortunes was the ever-given's blockage of the Suez Canal, which led to a staggering loss of $9.6 billion in international trade last year. So I think the big question is, will there be a market correction in 2022? So I think it's important for everyone to keep in mind that in 2020 and 2021, many manufacturers were shut down or halted production for a more extended period. And since the demand, especially in e-commerce, surged, it put pressure on shipping agents and further complications arose. So despite the shipping fleet being fully deployed, it was just not enough. So before we move on to the forecast, let's recall the situation in previous years, but let's also talk about what we think is going to happen quickly. So it's estimated that freight rates will be corrected and will drop by 30 to 40% in 2022. The fact that the freight rates could drop is good news, especially for importers and all of us in the supply chain community. And it's highly unlikely they will drop back to the 2019 pre-pandemic level of pricing, but it made me think of the question, what does it all mean? And in order to understand that, we need to look back a little bit. So I think what it does mean, though, is it means that there's going to be more spots on vessels, on ships. And recently, it has been more challenging to find a place on a container ship for the last year and a half. In August of 2021, delays caused the transport capacity to decrease by over 3.1 million TEU. Now that's 12.5% of sea transport. In 2022, the situation will change for the better, and at some point, it will be easier to secure a space for a container. But I think this is really a good segue to talk about available boxes or containers. So since there's going to be more shipping spots, more containers will be for hire. And it's estimated that containerized exports will increase by 2 to 3% in 2022. Now, 2 to 3% doesn't seem like a lot, but it's significant for a lot of reasons. But that also segues into another great aspect we have to look back on, and the fact that there's going to be more ships, okay? More ships coming into the rotation. So let's keep this in mind. In 2022, the global fleet will be expanded by many, many shipping units, many vessels coming into the rotation. In 2020, the fleet increased by 3%. In 2021, it increased by 4.3%. And in 2022, it is expected to increase by 4.5%. However, the biggest increase is forecasted in 2023 when 7.5% additional capacity will come into play. And in 2022, at least 22 larger container ships are set to debut. And many of those carriers that will be injecting those new vessels into the rotations, into the worldwide strings around the world, are companies like COSCO Shipping, which is China Ocean Shipping Corporation, CMA, OOCL, and MSC, Mediterranean Ship Line. So that's where your 22 ultra large container ships are going to come into the rotation this year, and where they're going to be coming from. Now, new players will appear on the shipping market as this year unfolds and as we move into next year, particularly Taiwan and Thailand. So Taiwan plans to launch 46 container vessels over the next year. And the Taiwanese carrier, Wanhai Lines, intends to expand its Trans-Pacific range, meaning that they will be able to get to other places around the world, not only in the United States. And on the other hand, though, Thailand wants to launch new container lines as well. And by 2025, they will have ordered several new container ships that will come into the rotation. And from what I've heard, we're looking at least maybe a dozen container ships that Thailand will put into the rotation, which brings us to the point of port congestion. So keep in mind, we've looked at more spots on ships, the available boxes, more ships coming into the rotation, but we also have to look at port congestion. And even before the Ever Given got stuck in the Suez Canal, congested ports were a day-to-day reality, especially those with the highest throughput, places like LA and Long Beach and Savannah and New York. On the West Coast, for example, as many as 100 vessels waited for their turn, far more than the ports could handle jointly at that same time. And this trend is going to continue in 2022, but it's going to lessen over time. And lowered port capacity has to do with limited staff and ports not being adept to accommodate many of the ultra large container ships now coming into the rotation. For example, an example of one of those ultra large container ships coming into the rotation is now the largest vessel in the world, the Maersk Mumbai, which holds at least 20,000 TEU, 20-foot container. So it's pretty amazing what they've been doing. But that is also a good transition into the shortage of staff. And there are many vacancies in the supply chain industry, starting with warehouses, warehouse managers, warehouse operatives, to truck drivers, especially in the US and even in the UK. And a lot of the movement restrictions, because of Omicron and mandates, have made that situation even worse. So, staffing is a big issue throughout every link in the supply chain. And then we have to reflect on the rising fuel and shipping prices. So I think one thing important to note is that transportation runs on raw materials. And we've been observing rising crude oil and natural gas prices for the last 6 to 7 years. Many businesses rely on logistics, and discrepancies in the supply chain led to losses. So in 1 year, the average bunker, which is the marine fuel that goes on a vessel, increased by 74%. I mean, let me just say that again. It increased by 74%. That's just mind-boggling, okay? And empty trunk fuel tanks is a way of cutting costs. So many of these drayage and intermodal companies, when they have idle trucks, are not, fueling them up. So, as a result of that, and they're not doing that to cut their costs, but as a result of that, trucks are not ready to be dispatched if needed. And this, not to mention, doesn't even account for the chip crunch. So, as we all know, there is a global shortage of semiconductor chips that are used in all types of heavy equipment, trucks, and cars. And this is another big issue that is affecting so many dynamics. But in regard to this, it's important to gather data and design optimal transportation routes to try to offset this. So I think now that we have an understanding of some of these issues like rising fuel and congestion and more ships coming into the rotation and things like that, and we have an understanding of some of the issues and facts and figures of what's going on, what are the shipping predictions for 2022? So to sum it up, in 2022, I believe we will not see freight rates at the 2019 level, but they will stabilize, and it will be easier to plan shipping. In 2022, we will probably see significant delays in shipping before Chinese New Year, which we are seeing unfold right now. We will start to see more shipping spots open up on vessels, but we will see more congestion around the world and in the United States. We will see more containers available to hire, essentially to book, okay? We will continue to see shortages of staff exacerbated throughout all modes of the supply chain around the world. And then we will, as I just talked about, continue to see more vessels coming into the rotation. And of course, we're going to continue to see rising fuel prices. So I think bottom line, elevated freight rates are likely to remain through much of this year because of market turmoil. And we probably peaked in December, but for the first quarter and probably even potentially into the second quarter, we're really not going to see any deterioration at all in the rate environment. But I think year-over-year results could start stabilizing later this year because of a surge in rates from the last year. So we need to look at it this way. Basically, we recovered very quickly in the middle of 2020 to the rate levels we were at before the pandemic. But then we started to have the exacerbation of freight Armageddon. And we saw really in the second quarter of last year, a big jump in rates. So as we go through the year, we're going to see a lot more stability year over year, in my opinion. So I am forecasting rates to drop in line with the economy cooling off a bit and some shift to consumer spending from products to services. But I do expect some volatility still with the market conditions because utilization still is high and markets are still stressed and there are capacity issues. So we are still going to be feeling some pain on price and capacity before freight rate corrections truly occur. So now we have to think also about Chinese New Year and the Beijing Winter Olympics, which are expected to add further pressure to an already struggling supply chain and supply chains around the globe. Because we have to keep in mind that China is the world's manufacturing floor. Much manufacturing is done there, okay? So as port closures have been implemented by the CCP, particularly in northern China, and as a result of the Olympics, there are more factory closures in an attempt to continue aiding pollution while this event, the Olympics, is still being held. So these border closures in northern China and the ascendancy of shipping lines is set to cause more anguish for cargo owners, and the country's phased border reopening will be delayed again. Just this week, we found out that the border openings in China will be delayed till the end of February in an effort to slow the spread of Omicron while the Olympics is still unfolding. So as a result of this, factory workers are going to be delayed in getting back to work, which is going to cause a whole host of issues and delays for all of us. The longer it takes for factories, for employees to get back to the factories to begin production again, the longer it's going to take to complete production, get shipments booked, stuff containers. There's just a ripple effect there. So that's a big fly in the ointment. And then, when we talk about the air freight market, without the extra capacity and the belly holds of passenger aircraft, there's little prospect of a post-pandemic return to normal for the beleaguered air freight market. And that's a complete ship show topic in itself for the future, which Jason and I and Vanessa will cover. But sadly, we are not expecting any improvement in ocean freight rates or services in the first 3 quarters of 2022. I think we'll start to see some slow improvement by mid-third quarter towards the end, but by Q4, some new capacity will enter the market, and that should start influencing rates. Furthermore, the inflation wild card could dampen demand around the world, and perversely, it's likely to improve the supply chain crisis in ocean freight by causing a freight market correction in rates. So I think the ascendancy of the shipping lines this year is a complete relationship reversal from when cargo owners dominated the market. So remember, all of you guys and gals tuning into the ship show used to dominate the market until the pandemic unfolded. And then it became a true shippers market where the cartel of container ship lines hold all the cards. So I think the shipping community acted as one in reaping the rewards, and many have felt exploited by the high freight rates. But in a demand economy, for every shipper not willing to pay a high rate, there is one who will. And let me just run you through a quick scenario. So what we find is, because of the volatility in the market over the last 2.5 years, and the peaks and valleys and the price gouging by the carriers due to the pandemic and other factors, a lot of people want to shop around to get the best price. And we understand that. But every time there's a delay in forecasting properly, not letting us know what's in your pipeline, and there's even a delay overnight to maybe check somebody else's rate, I can guarantee you those spots that we might have been able to get booked for you on a vessel will not be there the next morning. So remember, for every shipper who's not willing to pay a high rate that the carriers are providing, there is one who will. That's just the nature of the industry right now. And, the rewards have been so great, however, that this has really caused fundamental change in the shipping industry for the foreseeable future. And, for example, Maersk, which is the largest container company in the world, container line in the world, now considers itself a freight forwarder, not a shipping line. And they are offering a direct to client service at the expense of traditional freight clients. So, their healthy balance sheets have emboldened this behavior. And, all of their past relationships have meant nothing. So, remember, while some folks may get that rock bottom uber cheap rate by dealing with one of the container ship lines directly, I can guarantee you that the attention to detail, the hand-holding, and the value-added services that Supply Chain Solutions provides, you will not get that from Maersk or many of the other container ship lines. And as a result of that, in the end, it's going to end up costing you more money by the time you do get a hold of your freight. So that's just something to keep in mind. But I think additionally, while high freight rates look like they are here to stay, the other extra costs are lurking on the horizon. Things like biofuel levies, admin fees, equipment levies, and higher bunker prices, which is the marine fuel that goes on those vessels, could all add to higher freight prices throughout part of this year and next year. So we expect to see more increases across all of those areas in 2022, and it may well be the year of the surcharge, unfortunately. But as far as a market correction, that will not truly happen until Q4 of 2022, folks. So as I said, I do think there's going to be some corrections, but I think it's going to take some time for it to unfold this year. And with that, I'd like to pass this platform back to my amazing marketing director, Vanessa, to see if we have some questions.